Welcome everyone. Good afternoon. We'll start our lesson 2. Today lesson will go through LO2 as a couple of you know me. My name is Anjum Satha. Please, if you have any question, drop the email anjum@ukeversity.co.uk and I'll try my best to get back to you as soon as possible. So during our last lesson, we discussed about contract. We went through different elements within the contract. And today lesson will go through LO2, which is one second. Okay, so here, can you see the slides? Yes, please.
Yes.
Okay. So today lesson understand the company and insolvency laws. Last lesson was key focus on the contract. We discussed about elements of contract. We discussed contract. There should be offer, there should be acceptance, there should be a consideration, there should be a legal binding between two parties there, and we had a discussion about invitation to trade. We said need to be sound minded and have ability to enter into the contract. So, and we said contract come under civil laws. If we not fulfill, we have to pay penalties. We had a discussion. So today lesson will be LO2, which is indicative content, the procedures of company, limited liability, partnership, Company Act 2006. Really, we follow in to register the companies in the company house. We have two types of major company: is a public limited company and private limited company. And company, of course, it has its own memorandum, article of association, director role, and as a company and the shareholders and the public limited company, if we want to register, we need at least £50,000 worth of investment to be registered in the company house, and share distribution, profit distribution, and the requirement transfer. So directors and director is the really agent of the shareholders. We have discussion about agency theory. They have to work in the best interest of the stakeholders. Now, the stakeholder theory is really important. Not you work in the partnership, can be limited liability partnership LLP. We can register it, and then of course there is a no limit about the partners. Otherwise, under the Partnership Act 1890, partner need to be 2 to 20 maximum. Otherwise we need to be registered, and then of course limited liability. Okay, so insolvency, fixed and floating charges of asset will give voluntary requirement, administration order. Then of course we can make adjustments, when in case of company goes in administration, who get, what after selling the asset of the companies are. So that will be in our discussion. The company normally the separate legal entity. It has own credibility, credit scoring like individual. So director and the company is two, because the director is really sort of workers for the company. Director draw the dividend, and we can look around the profit and all, the remunerations and adjustment. So the company is separate legal entities, separate from the shareholders and the part of owners and the directors and money. So that's we need to be look around. Bail, a lot of discussion going around the bounce back loan at the moment in the market, because of course government gave the loan against the director, and that sometimes people are trying to close the companies because they are thinking, come on, it's a limited liability. But the limited liability can be unveiled. That's mean the limited liability can be unlimited until director not justify, because if they justify the legal loss or anything happen in the business, then it's fine. But otherwise, it can be criminal proceeding against the director as well. So we can look around these legal effect on companies and other entities. So, nationality in the time of war, it is illegal to trade with the enemies. It may be possible to lift the veil of incorporation, so impute to the company in the same nationality as its member. So that's which is, we have a lot of case laws in the past. Like here, one of the case laws incorporated in Germany, it's one individual was the British and held one share. So the claimant need not to discharge the debt to the defendants in the effective control. of the latter was, enemy's hand. And then that's, we can look around these. Of course, one of the common rule is the wider interest of the public that can be eliminate all other laws, so we can look around these. And the type of the company, we had a discussion. Limited company, unlimited, need to be file account by guarantees, liabilities. So these, different type. But as we mentioned, the limited and public limited. Public limited company registered in the company house. They registered in the stock exchange. 50,000 worth of investment. Of course, the share mostly owned by the shareholders. Director is the agent of the shareholders, and we have the agency. If the company want to be registered and want to borrow more money, they have to be look around the registered capital in the company house, and then of course they can issue shares and raise money from the various shareholders and do. But of course, we can look around the effect of issuing more shares. It can impact, the current shareholder, their earning and their ability. So private and versus public limited. So public limited secretary must have one and must be qualified and need not to be have one in the private limited. Accounts must be audited, needs not to be account before general meeting and must be filed within 9 months. Audit must be file account within 6 months. Audit not require the turnover below than 6.5. AGM must be held. It's not compulsory for private limited. Of course, the shares is a private investor and the resolution can't be passed. Written resolution and can be passed written resolution, which we can look around these, and AGM must be held, within a year, normally AGM for the public limited company. So these are the number of consequences being the separate legal entity. Limited liability, which we just said, is not really more than what you invest, and but if that's, it can be in the court can be unveiled in case of, like we mentioned, bounce back loan. So the company enter into the contract its own name, can be sued and be sued its own name, and the company own its own properties. The company, that's, the lot of company its own assets, its own liabilities, the registered company house, and we have a lot of case laws versus uh, in this case, yes, in the our portal. So we can look at on the general principle of the law, the individual, the shareholders, so the wrongdoing if the directors and those involved. Of course, agent and relationship that we can look around the responsibility being delegated to the company law, which is essential law governing creation and operate the registered company in the company house. We have different 1300 sections, 16 schedules with Company Act, which we can look around these, and remedies available the breach of the director duties, as stated in the law. In the company law, directors should be work in the best interest of the shareholders and wider interest of the stakeholders. Company laws include the part of the security regulation, insolvency. The company laws is include the insolvency laws and securities and regulation. The later is the part of the largest body of known as capital market. Of course, we need to be well regulated. We have a CG, corporate governance. We have Cerbon, we have Canterbury, and various other the reports and the corporate governance. Those we can look around to be effectively run the company in the best interest of the wider stakeholders. Legal subject its own right. Corporate governance, how the company run and control. The core laws of corporate governance overlap. They extend the large part of the core company's laws and the body in principle. Of course, we're looking the ethical, moral principle, and rules. So rules is mean laws really. Those we must need to be fulfilled. Otherwise, the crime if we don't obey these. But the ethics with the moral principle, those being set. So in the company. So various source of the company laws. So Act of Governing the Laws, we get Company Act, Insolvency Act 1896, the company director disqualification under the 1986, Financial Market Act 2000, Criminal Justice Act, we have a 1993, Company Act old, which was 1985, then of course Company Act recently following is Company Act 2006, Audit Investigation Act and investigation and CICS, community interest companies, really in the value and benefit of the community. So today lesson we look around 2.1. This is the company law, formulating for how we can formate the company, formation of the company, and financing and administration. So limited liability companies and PLC, public limited company, they issue shares. Of course, both have the limited liability. Company registered in the company house, and the company pay the corporation tax, on its profit, and the corporation tax must be, and it's a 19%, and advantages of for making a company. Of course, compared to the sole trader partnership, company has its own advantage. There is no limit of if it's a limited liability can be if the company borrow the money, it gets its own uh, name, of course, then of course company is responsible its own affairs. It's a separate legal entities and regulatory framework we have in shape of company act, which we follow. Or from a company is the form and filing is the series of the document to the start of the company in the company house. Of course, we fill the form and the required information, the name, directives, addresses, memorandum of association, how the company, where the company head office will be, how the company run, and the registered capital, article of association, role and responsibility, who will be responsible. Or generically, we carry on following the standardized, these, or you can write your own, and have the memorandum and article association. The private company must be under the word limited, and no two English companies can have the same name, very similar sounding names, that other. So we should be have the name which is already chosen because it's a separate legal entity. So we're not really. There are other rules, cross directorship and things, those we can look around in terms of the interest, existing registered name. And we can look around the name given misleading indication of the nature of the company's activities as likely to be cause harm to the public. So public interest is more important. Misleading information undertaking were given when applying the name that required approval. And shareholders and the share capital. Shareholders, of course, owner and the share capital is the registered capital in the company house. We can issue the shares to that's the registered capital. Of course, share premium and share capital. Share premium, we call the nominal value of the share, which is written. Maybe the share actual value was £10, but the market value may be £300. So we can look around. That's the difference. Whatever we sell and we get, that will be known as the share premium. So those we can, and different classes of the shares we can look around, like preference share, the ordinary share. Ordinary shareholders have the voting right, but the preference not. And in the private limited companies, it's a private investment, private shareholders. Directors, the most of the component of the company, the board of directors to manage day-to-day operations. Minimum number of the director required to form a company is usually two, although it is principle to have the sole director, provided such sole director is an individual and not the corporate entity. So we can look around. There is a no maximum number of directors, but of course, we can look around. In private limited can be at least one. In the public limited can be more than the director, whose individual must be at least 16-year-old. English law does not have any nationality or the resident requirement is respected of the directors. Of course, any nationality can be a director. We can look around. It's also advisable to have a director and a FISA insurance is in place to protect the director from the claim of wrongdoing. So it's called the liability insurance, those we can. And secretary, when the forming a company, you will need to consider would likely to be appointed as secretary of the company. The UK must have the secretary, but there is a no longer requirement as a private limited to have one. So we can look around the public and the private limited and English laws, of course, within. So those are the Company Act, which is 2006. We really be following within that, the requirement. So as assignment purposes, we can discuss some elements of the Company Act, and we can relate to the scenarios, administrative requirement, what we're supposed to do when company goes and liquidated, goes in the administration as the part of the company formation. You will also be required to state the intended, registered business address of the company. That UK must have to be registered in England or Wales, and thus like a lot of companies, people keep the London address for the sake of the reputation. This London-based, England-based, UK-based company. So we can look at the principal are the shareholders, the entities, the directors can be, and we have to work in the best interest of the directors. So that's we need to be look around. Constitutional document, the two key document which is the company are required by the Company Act to have, incorporation or memorandum of article of association. The memorandum of association, they must be standard form, and they include the subscribe the shares, wish to form a company under the Company Act, and agree to become a member. Article association, the contract between the companies and each shareholders, and regulatory are the regulate ways are the how the role and responsibility of director transfer shares and their shares. So we can look around these, article association, the cases where the company does not submit the article of association, but we can find the standardized or model article alone, which we can are termination of directorship, voting rights, dividend rights. All these is discussed, and we have to follow. Okay, then we have 2.2, look around the role and responsibility of the directors. Company Act 2006, the duty of the directors, the act, through the two bodies of the people, the shareholders and the board of directors, and the directors are charged to be at the management of the company affairs, and they should work in the best interest of the stakeholders and the shareholders as well. Shareholders are actually the owner of the company, their affairs, and the wider interest of the public should be kept in mind as well. The general duties of the directors include the act within the power, promote the success of the company, to exercise independent judgment, reasonable care about skill and diligence, avoid the conflict of interest, cross directorship, personal interest. Indirect, responsibility can be, we can register the company business tax, VAT, and pay as you earn, pension contribution, annual confirmation statements, account in the company house, HMRC, the returns, and reporting company charges, self-assessment, and the company directors can also be held, personally liable if, omissions and committed. So these are all the issues really in the Bribery Act, money laundering, and all, the legislation of the good corporate governance should be in place, and the training should be, and the training record should be up to date, Please, if you have any question, you can ask. So during even you can ask. So the shareholder of the company, effective the company's financial supporters, we look at transparency is really to attend the general meeting, voting right, the company profit, the retained profit, constitutional document, winding up the company, all, the final distribution, all we need to be look around the duties of the shareholders, pass the resolution, give the vote, selecting, and all, these are responsibility. An ordinary resolution or special resolution. Ordinary is normally once a year, then special resolution is special thing. We need to borrow more money and we need to be registered capital. We have to pass, the resolution, and then of course ordinary resolution, the shareholders simple majority of present the meeting vote in the favor of the proposal are more than 50% of the vote must be in the favor, usually deployed, through the show of hands, and the special resolution, it sometimes required the company to be certain cases instant, the charge of article of association, important sensitive matters, and we can look around article of this special resolution, and special resolution passed, and 75% majority must be vote in the favor of, like company want to be moved head office or suppose or other, so these all we need to be look around. Okay, so explain the process of insolvency. Even the theory could be the company don't tend to be continuous, existent forever, either outline the usefulness or become financially unviable, and they cease its business and dissolve. And the legal terms like various companies of foster, we have and of course Enron was one of the creative accounting scandals, bigger world telecom. So assets are sold and the proceed of the and pay to whom it owed the money. The process is called winding up, liquidating the company, and some companies wind up and liquidate are able to pay. First of all, always being paid to the debtors, and first of all, always we paid the creditors, and then we can look around the others, the lenders. We can look around. Then, of course, preference shareholders. At the end, with the money, anything left is the ordinary shareholders get. So we have an Insolvency Act which we follow. So we must need to have the administration in right to everyone. Yes, company going ceasing its business. Insolvency in the term of the relevant both the companies and individual, but the UK the term bankruptcy is the use, only refer the insolvency of the individuals and not the company. It's legally incorrect to refer the company is going to be bankrupt. Finally, the case of the winding of the company, that asset have the company turned into the money and any all the contributions secured, and the liquidator is required to follow the secretary audit to distribution and prioritize the payments and types all insolvencies and administration laws, the highly detailed and specialized areas. We can look around more these in different nitty-gritty of these in details, but here we insolvency administration is a process of designed to facilitate to rescue financial trouble companies. Liquidation is a process where the companies are really closing up, and during the administration or liquidation for the administrator and liquidators are the various powers, including the power to bring the legal action, view the challenges, validity of the certain transactions, that the fraud and all. Security, the aim of the security laws is to essentially provide protection those who decide to invest their money into the security. The term security covers the complex range of the investment product unrelated to the company. Security regulations is a part of called the finance laws and banking laws and conduct of the investment business, and the market where investments are traded and increasingly regulation. So of course we need to be looking around seizing businesses, shares and all these. And like in global financial crisis during 2008, we used to be financial service authority, financial conduct authorities. Now we can look around the financial policy committee. These so it can be so Bank of England or the financial conduct authorities. We can, of course, a lot of guarantees in involve those we need to be settled as well. So to be further function and really transparent, providential regulation authorities, and these are different legislation we have to follow. So key security regulations state the UK remained the Financial Service and Market 2000 and amended most recently Financial Services Act 2012 and 2000 Act is established to empower main security regulators and the province. Of course, a lot of fraud happen, the manipulating of creative accounting and increasing the value of the shares and different sentiment of the people. So ultimately, people also want to be clearly legislations are in place those to protect wider interest of the stakeholders. There is a clearly regimes supplement and increasingly referred the soft laws. Important example of the UK Corporate Governance Code and stewardship. Steward are actually it mean the shareholders and the agent, which is directors can be. So they should be really work in the best interest. Then 2M advise the insolvency process, which is mean merit criteria. So whenever we deal with the merit criteria, please we need to be make sure we come more compare and contrast views, adding more facts and figures. Loss of the market, the company is insolvent, management failures, why this is happening. So we can look around, loss of the long-term fund, gearing, because the gearing ratios like debt to equity ratios, working capital, the company not managed, or we have, a lot of case laws. We have insolvency, creditor initiative, bankruptcy, liquidation proceed. The client sees the local supplier, the goods in the country, then one of the clients, the customer, the local private owned limited company manufacturing has failed to pay the debt, due to the client is locally currencies and equivalents to in the foreign currencies. Of course, the debt is more than 30 days overdue. There is a dispute regarding the underlying transaction and give rise the debt, and the debtor has to be valid defense for the non-payment of the debt, and the client now been asked to be the professionally advised. So we can look around any action the client undertake insolvency laws of your country to deal with the currently insolvencies debtors, and we can look around the process involved, so these processes we can judgment route. And if we want to work toward distension criteria, we have to look around the capital maintenance. The concept state with the profit should not be recognized unless the business has the least, maintain the amount of the net assets. So what is the net asset? Net asset is mean the asset minus liability is equal to net asset. So net asset. If the liability is a lot, more than the net asset, so what is the profit or the retained profit? So you may be not enough to be settle the liability. Increasing asset from the sale of the stock to the shareholders increase the cash. We can look around the decrease the assets, the payments of individual or the distribution shareholder decrease, and the capital maintenance concept, can be skewed by inflation, and since the inflationary pressure, we can increase the net asset even underlying the amount of the asset has not been changed, and more the score, and we need to be adjust, the effect of the inflation. So we can look around these factors and the concern, the net change to the balances. These some creative accounting can be play here, the things. But limited company had the buffer fund for the creditors. We heard about the buffer stock in the inventory, safety levels to maintain, at least, the general rule limited company cannot reduce the share capital. However, the exception, the general rule, we can look around the reduction of the capital under Section 6641, the Company Act 2006, reduced the cancel the liabilities, partly paid the shares, and the company give up any claims for the money of owing, return on the capital excess of the company needs, reduce the asset of reapplying the cash to the shareholders, cancel the paid up capital are no longer represented by assets, so those we need to be make necessary adjustment. And pass the special resolution, apply the court confirm the special resolutions, and if reduction involve first two methods of the court must be the company settle the list of the creditors in title object, and the court must not confirm the reduction until satisfied that all directors either the consent reduction had to be debt and discharge the security. These, we can look around the procedure of the private limited company, pass the special resolutions for the solvency statement. We can look around the meet the debt with the following years solvency statement made, without the reasonable ground and cup. So additional information have here, please, if you want we work toward the treasury shares. We can look around created when the public limited company up to 10% of the share can be held to the treasury, which means can be reissued without user formality. General rules, share which are the purchased by the company must be cancelled. The amount of the share, the capital will reduce the nominal value and cancel because what is the nominal value? Nominal value is known as the face value of the share. Okay, so we have different section of the laws which we can discuss when we looking the distension criteria. So these are the stock exchange rule under the section 724, the Company Act under the 726. We can look around shall we give the companies any voting right than the share. No dividend at the form of the distribution can be made in the respect to them. Under the section 729, in the event the shares are cancelled, there will be reduction in the capital. Of course, the capital is, or we call equity capital. Equity means the shares. So it's the capital make up the nominal value of the shares, face value, and the premium. And when we cancel, so we have to look around these, the need to be made the adjustment accordingly. Under the Section 730 under the Company Act, the company must deliver the return, the star, no later than 28 days after the shares are cancelled. And the shares, each, the class of the cancel, the number and the nominal value of the shares, the date for the cancel. So these all need to be informed to the company house. The notice must be a complete the statement of capital and the respect of the company share immediately following the total number of the share, the aggregated nominal value, the prescribed, particular right authorized to the share, the total number of the share, the class, and the aggregated value of the shares, of course, that represent the total value of the share capital, and that need to be make the certain adjustment, and we need to. Then please, if you want to further explore about all the relevant links, for further reading, please, those are given, and we have the booklet which we shared during last lesson can be used. And if you have any question, please, you can ask. Any question?
No, that's good. Thank you.
Okay, so today lesson really we discuss about the company, registered companies with separate legal entity, insolvency, and the company really are the liquidation, liquidators, and how we can settle. And of course, these the rules of the public and the private limited company we have to follow as the prescribed in the Company Act 2006. So that's we can, and of course, if we want to be in details, gov.uk Company Act 2006 and all the section, then we can pick more stuff we can use the booklet which we've been given, and that's which we can use. So that's all from my end today, and the next lesson will go through LO3, and then of course following we'll do the assignment discussion. Thanks for attending and have a lovely weekend, and I'll speak to you during our next lesson.
Thank you. Have a good weekend.
Thank you. Bye-bye.